What's up, everyone? It's Karthik with Moneyvest. Welcome on board for our market open live stream. Thank you so much for joining in as we are seeing the market essentially flat. This is a very, very uneventful last few days as December. The volumes are really, really low as well. I mean, you can see the S&P 500. I mean, just take a look, right? The volume is extremely low for this market right now because of the holiday season, I'm sure. But the key stats under volume, you'll notice 57 million shares traded yesterday against 87 million is the average 30-day volume. And for QQQs, also 47 million shares traded versus an average 30-day volume of over 61 million as well. So we are certainly seeing a substantial reduction in volumes for the entire market. Nvidia, 165 million versus 207 million is the average 30-day volumes, and Microsoft was slightly higher, but other stocks are certainly trading at much lower volumes right now. So hope y'all are doing great. Welcome. Good morning. And we're ready to wrap up the first week of December 2025 as markets are essentially flat. QQQs are slightly down, I think, in the month of December here, slightly up over 69 basis points, and S&P 500 is up over 1 basis point. So quite literally about as flat as it gets for this market. So we got Tesla up over 30 basis points, rolling over a little bit from its highs of 450. It has dropped almost 1%, and Nvidia is also slightly higher, over 30 basis points. Volatility sitting at just over 16 right now. We got crypto, so Bitcoin trading back up to over 92,500, but pulling back a little bit after that rejection there. And Ethereum also sitting at just under $3,200 at the moment as well. So good morning. This is actually quite uneventful, right? We don't really have a lot to really go over and discuss in this market right now because volumes are dropping off, markets are flat and not going anywhere. And a lot of individual stocks are also very, very flat at the moment. As silver and gold are also pushing higher a little bit. So silver prices are trading up to $57 per ounce. They are still up almost 100% year to date. A little bit of a pullback right now, but gold prices also sitting at just under $4,200 per ounce at the moment. And a lot of individual stocks, including the likes of Oscar, BMNR, BITX, have seen a little bit of that recovery, but still struggling a bit from their all-time highs. But Megalef said, we are back. I know, right? I mean, we tend to be back and forth is what I would say. Like, we're not back, we are back and forth, I think is a much better way to put this for this market, given the level of volatility, given, the kangaroo environment in this market, and just sideways consolidation is what we're seeing right now. And volume's obviously struggling quite a bit. And yes, Nvidia struggling to break out over 183, 184. That's a big resistance right now for Nvidia at the moment. So market waiting on that new Fed chairman, if anything. Yes. So I think Jerome Powell's got his term until May. So we're most likely going to get that news very soon, maybe in the next few weeks, first week of January, first week of February even, that who's going to be replacing Jerome Powell. But I think he's got a couple more meetings under the belt right now as a Federal Reserve chairman. So if you come over to the meeting and calendars, he's got one more meeting, of course, for this year. So December 9th, December 10th, really. So next Wednesday is the last and final meeting of 2025. And then he's going to have 3 more meetings in 2026. If you come over to 2026 calendar, he's going to have 3 more meetings, January, March, and April. And then one more summary of economic projections is also going to come out for 2025 here. I don't think we have the summary of economic projections. No, we do. So the SEP is going to come out with this meeting for next Wednesday. We are going to get the summary of economic projections and the latest projections for 2026. These were the last expectations here. 1 rate cut was being priced in or penciled in from the Federal Reserve, dropping rates from 3.6 down to 3.4%. That is what they were forecasting. And, given the unemployment, it's been rising a little bit. ADP numbers also coming in with a massive decline, 32,000 jobs lost in the month of November. And the fact that unemployment is on the rise a little bit. It's got up to 4.4%. I wouldn't be surprised if these rate cut expectations do increase down to 3.2%, meaning 2 rate cuts in 2026 is what they pencil in. So That's going to be coming out along with the statement itself, of course, and then 3 more meetings for Chairman Jerome Powell, and then we're going to find out who the new chairman of the Fed is going to be for the next new term under the new administration. So hope y'all are doing great. Good morning, everybody. Good morning, Moneyvest Nation, and hit the like button. Make sure that you are dropping a like and subscribing if you haven't already, and let's see what the market has in store for us. But yes, the volumes have dropped off quite a bit, and it's really just the holiday season, right? I mean, people tend to pay much less attention to what's going on in the market, and volumes are pretty obvious element of that, as trading volumes have dropped quite a bit. I mean, a lot of individual stocks, market indices, everything is really trading on lower volume. Every time Tesla gets to this level, I short it with 500 to 1,000 shares, and it always comes down to 400 to 410 area within a few trading days or so. Frankie, that's great. Congratulations. Definitely be very careful, because if it does blow past that resistance of 470, then you don't want to get caught on the wrong side of the trade, especially if you are shorting something, because your losses can theoretically be unlimited or uncapped, so to speak, because the stock can continue to rise and of course accelerate faster, and as a result the short position can really get squeezed out. So as long as you're managing risk properly and it's working out, then great, but certainly pay close attention to those resistance levels at around 470. If Tesla breaks over 470, then I think new all-time highs and well beyond $500 is something that is going to be a very high probability outcome. Yeah, stop loss at 460, perfect. That's great. Managing risk is incredibly important when you are trading or even investing. That's one of the most important pieces to the entire puzzle when you are managing money, and that is risk management. If you understand the risk, you essentially become immune to market volatility, and nothing really can kind of affect you anymore, because you've already priced in the worst case scenario, what could go wrong, what's my downside, all those things. As long as you are mentally prepared for it, then nothing really can affect you, right? So then you're pretty comfortable. If you can manage the worst case scenario, then you are good on that trade. So that's how I think about almost all my investments, is what is the worst case scenario. Obviously, the worst case scenario is always that investment can go down to zero. Whatever stock, whatever piece of real estate, whatever asset that you were buying, what is the worst case scenario? If you can handle that, then that's good. And what's the probability of that outcome as well, right? What's the probability? Because trading and investing is nothing but game of probabilities. We're not here to predict. We are here to analyze the probabilities and then figure out whether it makes sense to take that trade or investment or not. So yeah, perfect. What do you think about Jensen's interview with Joe about AI going forward? I think I loved it. I'm only halfway through that, so I have to watch the other half as well. But so far, I think it's incredible. A couple things that obviously he mentions is, artificial intelligence is here to stay for the long term. It's going to really transform the way we do business, and technology moving forward is going to evolve at lightning speed. And I think we are going through, as I mentioned before, we're going through a big upgrade cycle in this entire workforce, similar to what we went through back in the 1990s when the internet was launched and when computers were introduced and invented. And that's really what's going on here. Is I think everyone is going to become more and more skilled at using AI, and it's going to be an everyday part of our lives. It already is, right? I mean, who here has used AI today, right? Probably a lot of us, right? Over 90%. We can do a poll for this, but I'm using it every single day in my research, in my education, in my learning, in my analysis, in everything, right? So it's becoming a day-to-day task for everyone. And moving forward, I think, this is where we're headed, and the companies that are going to win out over the long term are the ones that are the most prudent with their invested capital. There's a lot of companies that are just throwing money in AI and hoping that it's going to yield good results, or it's going to, they're going to make something out of it. But it's the companies that are actually making very calculated bets, companies that are acquiring, using their capital very strategically, and are also making sure that the investment returns that they are forecasting are realistic, right? Not just throwing money, hoping something works or something sticks, because that's what happens with every single industry that is born. there's a lot of players in the beginning. There's an oversaturation. And then eventually what happens is consolidation. The big players, the successful players buy out the smaller players and the middle players, and then eventually it consolidates down to just a handful of companies that dominate that industry. I think same thing's going to happen with AI. There's a lot of players here, but eventually it's going to consolidate. That's what's happened with banks. If you go back 20 years, there were a lot of banks. There's I think there's even a chart that shows you there was over 20,000 banks in the US at one point. Over time, that number's come down to under 10,000, now under 5,000, and now the biggest banks own most of the capital and deposits in the US and even in the world, right? So there's just a handful of banks that are there. Airline industry, same thing. Electric vehicle industry, same thing. I mean, think about EVs, right? 3 years ago, the whole hype and the craze was EVs. So many EV players, so many entrants. And then eventually it consolidated, and now we only really have a few reliable handful of companies that are really dominating this industry. Same thing is going to happen with AI. Hyperscalers, data centers. Now, of course, the application is going to be different with AI. It's not like, AI is unlike EV. EV is like a whole sector of its own. AI is just a tool of application that can be applied across all industries. But when it comes to data centers, hyperscalers, cloud computing, chips, that's where the consolidation is going to happen over time. So, overall, I think this is the future. As I've already mentioned, there's a few sectors that I'm extremely bullish on, and I will continue to dollar cost average and buy into those sectors. In the SoFi, for example, blows past the resistance and goes to $40. Just say, how do you reanalyze your CSPs and pick new strike prices? Is it by creating new levels of resistance and support? So CSP's strike selection is very much dependent on where you are comfortable buying that stock, right? I wouldn't be selling a CSP at a price where I'm not comfortable buying that stock. So as I mentioned this before, and this is actually mentioned in the 44-point checklist, right? So if you come over to our collections, and then let me just go over to the options trading course here. We've got a 44-point checklist, right? You can download this right here. This is a PDF document. This is an options wheel checklist. This goes over, I think it's a 3-page PDF going over every important aspect of trading the wheel, selling options, puts and calls. And in this video and in this PDF, you will find when you talk about when you're selling puts, the most important thing is making sure that you're selecting a stock that you are bullish on long term, that you actually want to own, you want to accumulate, or actually excited to buy that stock. And then the second thing is the strike selection. So not only the stock, but also the price at which you want to buy. I can have, that's another really interesting thing that we've talked about in the past, is that you can have a great asset bought at the wrong price and still not make money, right? Even the best of the assets can be very bad investments if bought at the wrong price. The worst of the investment assets can also be great investments if bought at the right price. Anything can actually make you money if given to you at the right price. That's the core lesson in fundamental analysis and valuations, is that everything has value, right? And if given to you at the right price, you can actually make money from it. And so our job is to recognize great assets trading at great prices, right? We don't want bad assets trading at bad prices, obviously not. We also don't want great assets trading at really bad prices because then we don't make money. We want great assets, great stocks trading at great prices. And that's what selling CSP is all about. We have to pick great stocks at great prices. And so as long as you're comfortable with the decision you're making by selling a CSP and the price you want to accumulate at, then it makes sense. So to answer your question, if it blows past $40 and if $40 becomes a new support and the valuation changes, the thesis changes, and you're like, okay, $40 is a good deal for SoFi, then that's a CSP strike that you pick. If you feel like $40 is still a little too high for SoFi, I don't want to touch it at anything over 35 or $30, then you readjust your strike price based on where you're comfortable buying the stock. That's really what it comes down to. So as always, again, strike selection, stock selection, two really important pieces of investing long term, and we always want to look for great stocks at great prices. I'm scared of the next appointee for the Fed chair. I think they are going to have a bit of a hidden agenda of making sure. I think the Fed is going to lose its independence over time. So I think two things are going to happen. Now, look, I'm not one for making predictions. I never make predictions, but I do think that in the foreseeable future, we're talking short to midterm, the first prediction is the Fed might lose its independence. Whatever instructions come from the White House is what the Federal Reserve is going to do. If that means cutting interest rates to help support the economy, to rip the markets higher to new all-time highs, and of course to use that as a marketing campaign that look, we're seeing all-time highs, we're seeing great returns. Those things can certainly happen, right? The Fed may lose its independence because we already know, Donald Trump continues to force the Fed to cut interest rates. Jerome Powell keeps pushing back that we're independent. We don't want to do that. We're going to do what is actually warranted as per our dual mandate. The second thing is more AI and technology related. I think the Federal Reserve's dual mandate needs to be revised. I think it's a very old mandate the Federal Reserve has based on one simple tool of interest rates. And with the rise of technology and AI, I doubt that interest rates alone can help fix the problem if unemployment starts to go up on the back of AI displacing people out of their work. So, it's a very new problem that needs a new solution. An old solution cannot fix this new technological problem. And as a result, I do think that it will, at one point in the future, get revised once we start to see, again, it's more of a prediction, I could be wrong, but we start to see that lowering interest rates alone is not helping the economy with unemployment. If we actually get a 100 basis point cut in times of a recession and the economy doesn't bounce back fast enough, unemployment doesn't bounce back fast enough, that's a clear indication that even lowering interest rates is not good enough to bring employment back. It's going to take something different. It's going to be something else that's going to help the economy. So that is one of the reasons why I do think the dual mandate is going to get revised over the long term. The goal is still going to be the same. How they achieve that goal is what's going to change, in my opinion. It's still the Federal Reserve's goal and objective to make sure that inflation is stable and unemployment is low. How they get there is going to get revised a little bit. It's not just going to be by controlling interest rates, because they do have other levers that they could look into to pull. But let's see. Okay. FizerV, let's take a look at that as well. Let's take a look. All right, so huge gap down for this FizerV. Resistance all the way up to as much as $88, $89 now. Incredibly oversold. There might be another resistance closer to $70, $71. So that right there is going to be that resistance to also watch for FizerV. And support level is going to be all the way down here, 59 closer to $60. And like I said, resistance all the way up to 73, 74 bucks for FizerV. I agree. Independence will be lost, very much like the Department of Justice. Yep. I think that is a possibility there. Meta jumping, cutting 30% of the metaverse. It's up another 4.6. Look, this is such an interesting game. It's should have picked up more Meta. Obviously, I have about 40 shares. Not a big position right now. The plan was to, of course, get up to about 100 shares, but I could see myself adding 60 shares and then selling a call against my shares today. I think that could be a good option for today. So Meta, 40 shares. Might pick up another 60. It's not gonna be a buy right, but it's gonna be good because cost base is sitting down at 630s. A lot of us picked up in the 580s, 590s. I know a lot of us were buying when Meta was selling off. It was great value for money, right? I mean, it literally bounced right off of our light buy, came down below the light buy. Light buy was 590 for Meta. So Meta platforms we're looking at right over here. 590 was a light buy, came down to $580 and bounced right off. So I'm actually thinking about picking up more shares and then selling a call today. I think that would be incredible for the stock here. So cutting metaverse, jumping over 5%, trading up to 674. Very, very nice. Expected to meaningfully cut resources for building metaverse. And this is exactly what Wall Street wants to hear. This is exactly what what Wall Street wants to hear from Mark Zuckerberg and from Meta is that we are focusing on core advertising and not getting diverted from the metaverse. I have to add 40 more, Caddy Srinivas, yes. So could be a good opportunity for me to also add a little bit today. Ringoldus, just look at Meta platforms, forget about 590. Yeah, I mean, that's what I'm saying. Like 590 was a light buy, came down to 580 just a few days ago, and then of course is now bouncing back up to 675. So that was a very, very good value for money for Meta platforms. Getting back up to that resistance here, 680, 685. That is going to be that resistance, and support level now is going to stay put at 659 for Meta. Man, I'm actually quite excited about the covered call premiums that are going to be there today. So at the money calls, we're sitting at $5, and this is just 1 day out. 1 day out. So I'm curious. I might actually sell some Friday calls, some tomorrow calls. Like, that's what I'm going to do. You know what? I'm actually going to do that right now. Once the market opens, I am going to just do that for Meta. All right. Done. Done. Let's go. We're excited to sell the covered call there. So we'll look at the contracts once the market opens, but yeah, it's nicely ripping higher, up over 6% now, 679. So very, very nice to get that. And we'll see. I think Wall Street's going to get excited again for Meta platforms, given that they are considerably cutting their metaverse resources. That means lower cost spend and putting more money towards artificial intelligence again. Palantir's new product, I think it's great, but the stock's not really pricing a lot of that in. It's only up 71 basis points, right? So we'll see. We'll see how the revenues and the earnings play out for Palantir. That at the end of the day, like, that's really what matters, is numbers and quantitative data, right? Quantitative data like valuations and numbers, revenues, earnings, cash flows. That's really what the stock is going to be moving on, for the long term. Like, that at the end of the day, like, that's really what we have to analyze. So, yeah, Metaverse group budget cut by 30%, and we will see where those premiums are. I'm actually quite excited. The 1 day premiums are looking pretty juicy. So for tomorrow's expiration, I might even consider selling it at the money call, like 680 strike. 680, obviously right now it's going to show a little bit different. Nothing, but at the money calls, like we can get a bit of a idea from yesterday's options chain. So like at the money calls, we're going for $5. So that's $500. I'm just going to probably get myself that. Would be nice. QQQ also jumping on the back of this. And Meta, look at that. Huge pump. $680. Very nice. Very, very nice. So, yeah, Meta pumping. We talked about it just a few minutes ago, but also obviously pumping because they're cutting their metaverse revenue by 30%, which is a considerable amount. CEO Zuckerberg plans to deep cuts for metaverse efforts. This is really what Wall Street wants to hear because they never really believed in the metaverse in the first place, and I think them cutting resources and expenses, of course, improves the bottom line. At the end of the day, like, that's really what Wall Street cares about is the bottom line, is earnings per share. And that's true for market indices, that's true for individual stocks, that's true for everything. You can essentially evaluate any asset based on its potential ability to earn earnings, right? Revenue and profitability. So that's one of the reasons why it's so important for Wall Street. And as soon as this news hits, now it's up almost 7%, getting up to over 684 for Meta. Yeah, thanks for telling us to buy Meta under 600, Karthik. Yeah, so we were picking up quite a bit. I was actually kind of hoping, or not hoping, but expecting, for Meta to come down further, for me to all dollar cost average a little bit more. But I did pick up, 5 shares at a time because it's a pretty expensive stock, right? I mean, if 100 shares, like $64,000, like I just dropped 40 grand on this, literally pre-market. So it's an expensive stock, but I would much rather prefer to pick up on confirmation on that, reversal than on a falling knife. So we did add in the 590s. I did add in 595s. I know a lot of you guys have sub $600 averages. But yeah, that was a good pickup, and the plan was to continue dollar cost average into it. So now, obviously I'm up to 100 shares. I can just sell a call at the open in about 20 minutes or so. And the idea would be to most likely sell an at the money call for tomorrow. Like that's going to be pretty good premiums. It's jumping 7%. I'm sure call premiums are going to be absolutely going crazy as soon as market opens. So my take on Netflix. So let's take a look here. Netflix, it's been trending down, lower highs and lower lows. There doesn't seem to be much of a confirmation right now. Still out of support at close to $103, $104. And if it does break down further, $99, close to $100 is going to be that next support level. Resistance all the way up to as much as 116, 117. It's a little bit more oversold. There seems to be some accumulation from the institutional buyers as per the L2 Banker Oscillator. But again, it's in a bit of a downtrend right now. So lower highs and lower lows continues. Srinivas, I have to look at where the options chain is at the open. I don't know. Like right now, we don't have any updated options pricing because as you can see, 640 is still considered out of the money when Meta's already trading at 680 right now. So as soon as market opens, we will evaluate where these prices are. But as I said, I'm looking at something slightly in the money or at the money call for tomorrow. So that would be what I would be looking at. Yeah, I mean, I wouldn't say exploded. SPY and QQQ exploded. Well, this is not the definition of explosion. It's up 20 basis points, like 0.2%. And it's also, again, quite interesting. Even in our Discord, sometimes I see members talk about, markets took a dump when intraday they're down, like, let's say 20 basis points. Okay, from the high of day to where they are now, they dropped like 30 basis points. But that's not definitions of dumps and explosions, right? These are very small, like very regular market fluctuations. So I think it's important to kind of is this dump in the room right now? Right now? No, I don't think so. But I'm just making a general observation, right? Because this market has, I think, really given us some false expectations of what the reality is, even though this is the reality, but what the reality has been in the past and what it currently is. We're kind of deviating away from our expectations here, because even I right now, I'm like, okay, 2020's like when I'm forecasting for my own financial planning, I'm like, okay, next year another 20%. If I can grow my capital another 25, 30% for the next 5, like that's not realistic. That is not realistic. It's just the last 3 years have been very generous. I think everybody needs to recognize that. It's been very generous from the market for them to give us 20+% return. But if you look at longer term averages, they always revert back to the mean, which is closer to 8-9%. Expecting those kind of numbers could be disastrous. So that's why we always have to play it safe. I recommended your channel. Friends are asking what is the options alerts are, how to make use of it. So I just sent out the options alerts in the options alerts in Discord. So that's there. Then we also have other members sharing all kinds of alerts and updates. So that is in the Discord. You can always access that. So all right. Looking at smaller time frames, what is your price target on Meta? So again, no price target per se, but as mentioned, light buy is closer to 590. Fair value is even lower. 550 was another really important target that I think we were all waiting for. We were like, okay, 550 could be an even better price to look at. But then, of course, it recovered, fairly quickly from those levels. So even in the market updates, I know Meta kind of falls towards the end of the video after we've gone through all of that. So we talked about it repeatedly in the market updates that I think Meta is great value for money here, trading, at sub 600. So Karthik, what signals are you looking at for large sell-off? The Moneyvest index. That is it. That is literally it. Like if you could just take away everything, if I didn't have TradingView, if I didn't have anything with me, if I was like just out in the open, off the grid, in my own van, somewhere in the mountains, and I just had access to the Moneyvest index, that's all I had. Like I could just open my phone and just look at this one needle, which is the Moneyvest index, and I could just look at that and trade off of that, I would be fine. I would just be fine. That's it. So if I can just look at the Moneyvest index, and if it drops below 3, better. If it drops below 2.5 or 2, don't even need to know what's going on in the world. I'm just deploying capital. I'm just buying. So what is the basic composition of the Moneyvest index? Well, there's a lot of indicators that are already part of it. Volatility is one of the many indicators that we use, including market breadth, including market thresholds, including momentum indicators. So we kind of had a very, very comprehensive study, back tested a lot of it, and then figured out the recipe which worked the best in terms of which was the best results that we got. And the one that got us a hit rate of over 99% over the last 20 plus years of backtesting it is the one that we actually publish and use regularly. So some of the other ones were very close, 70%, 75, 80%, but this specific composition got us to over 99%. So meaning that every time we bought at a Moneyvest index below 3, yielded us a profitable return 99% of the times. So I've done a whole video on the Moneyvest index that you can watch on Patreon. It's available, introducing the Moneyvest index. That's available for all members. What's the Moneyvest index now? Well, let's take a look. We are sitting at, for S&P at 3.54, and for NASDAQ 100, it's sitting at 3.49. So we're back at neutral, and then S&P 500 is back in optimism. As you can see that this was the April dip in panic, 1.83. So as I said, you can close your eyes, you can look at the Moneyvest index. Like someone can tell you like, okay, 1.83, we're below 2. Just deploy. Like don't need to overcomplicate it, just keeping it very simple. 1.83 is April 8th. That's literally the bottom. And then boom, back up to like optimism by May. Huge recovery. And then we consolidate sideways. We get these dips every so often. We come down to neutral. Recently, we came down to uncertainty, 2.8, and then we're back up to optimism. So, and you can check, what previous year looked like. 2024, we didn't really get even a single reading below 3. We came down very close. August 5th, 2024, the yen carry trade blow up. In fact, this is the closing value for the day, right? This is the closing value on August 5th. But if you look at the pre-market value, which I calculated manually, and I actually did a video, if you guys remember, I did a video at like 5 a.m. in the morning after the volatility opened. I calculated manually what the Moneyvest index would be if the markets were open, and we were sitting below 3. And that's when we were, of course, deploying capital pre-market. And then as soon as the markets open, we had this huge reversal as buyers stepped in and we pushed right back up. Towards the end of last year, we also did come down to uncertainty, 2.79, and then we recovered. And then, of course, towards the beginning of this year, we were pushing back higher to all-time highs. 2023, we actually got quite a few dips in March 2023, and then a very, very brutal September going into October. We had consistent selling pressure all the way down to fear in 2.2 in October 23. we got some pretty good buying opportunities. And this was 2022. Just take a look at how many opportunities we got in 2022. All of them were buying opportunities. Every time you came down to fear and panic, deploying capital here and here. That's why quality wins out over the long term. You know, a lot of people might wonder, okay, why are we not doing anything today? Like, why are we not buying? Why are we not actually deploying capital? Because there's not really much to do. When there is to do, that's when we deploy. That's when we actually, quality over quantity. Every year, I go into that year knowing that I'm going to get at least one buying opportunity, and I need to make the most of it. That's what it is. Like, every year, I go into it knowing or expecting that this year the market's going to give me one opportunity. It's going to be the highest quality opportunity, and I better be ready for it, and I better make the most of it. That's what it is. Every other time, it's just okay. Dips, small pullbacks, small dips, small pullbacks. I'm dollar cost averaging. But there's going to be one big opportunity. This year it was April. Last year it was August. So you just have to be ready for those. And that's really what it comes down to. Oh my God, you guys are talking about that again. So Rax, lifetime membership for Discord. So we're kind of thinking about it. We're flirting with this idea, but we haven't decided anything yet. As soon as I kind of make my mind on that, we'll definitely let you know. I don't ever see you living in a van. What do you mean? I could do that. I could see myself living in a van. I would love to just travel and have that lifestyle. And I would really like to, like, at least for a month or two, like, just travel cross country. I think Dave's really put this idea in my head. Is like, just get like a really nice big van with an entire, interior done, and just travel and trade. Get the Starlink and you're good to go. And take my RV for a month. That would be great, man. If you can even map out the route, like where to go, pick it up from Jacksonville, and what all states to hit, that would be great also. I would really appreciate that. And I would do that for like a whole month. So yeah, I would love that. Georges, hello from Greece. Vici Properties, any opinions? I like it. I think it's a good REIT that you can consider. There's another one, Realty Income Corporation, but these are mostly going to be, very high dividend yielding plays. They're pretty volatile, interest rate sensitive, but 6% yield. So good income, good cash flow. And long term, they've got a pretty good reputation of, appreciating and of course, consistently making higher highs and higher lows. So got a pretty nice REIT. I do prefer, different kinds of REITs, kind of diversifying the portfolios. Of course, Realty Income Corp, I would prefer more than Vici Properties because their portfolio is a bit more diverse, based on what they have. So, he will live in a 5-bedroom soon once he gets married. No, I've been actually looking at least. So I'm trying to figure out, like, what is the right bedroom spec to actually for it to make sense, right? That's what I've been kind of thinking about, and I've been driving myself crazy over it because I'm like, okay, do I need at least 3 bedrooms if my parents are visiting, and then my brother's visiting, or my in-laws are visiting? Like, at least 3 bedrooms is like the bare minimum. But then how far do you really want to go up to? Because then it's going to be pretty wasteful if you go up to like more than 4 or 5. So I'm kind of figuring that out. I'm like, okay, what's the right number that it's going to be efficient, useful, and not an overkill, but also not an adjustment or a compromise. You know what I mean? So like, I'm trying to figure that out. But yeah, can't decide on a car either. Like, I have this, I don't know what it is. Like, I can't seem to get my head wrapped around on spending on a car. Like, I don't know why. It's a thing, it's a mental battle that I have to have with myself every time I even think about spending on a car or spending on some kind of thing that I know for a fact is going to depreciate. It kind of goes against me, so it's very, very tough, to be very honest with you guys. It's not easy. I keep hearing voices in my head from Warren Buffett and Peter Lynch. They're like, what are you doing? You're buying yourself a car? It's just crazy. But no, eventually I know I'll come around. Okay, Rax. Yes, I'll get back to you on the email. Thank you for sending that. I will definitely get back to you as soon as I can. Just buy an old Toyota Tacoma. Yeah, I mean, I've been looking into Toyotas as well. I'm like, okay, might as well just, get something reliable, efficient. So, yeah, it's just been a problem. I have 3 bedrooms for me and my wife and my son. That's amazing. That's great. I'm just really trying to figure out what is the right bedroom spec. Iron, good time to buy. So I did pick up Iron yesterday. I think I picked up about 100 shares, right? My plan is to sell covered calls on that as well. So yeah, I think Iron is pretty good in terms of DCA accumulation opportunities here, trading at that support of just under $40. So that's one to consider. Totally get the depreciation asset thing. They're money vampires. Yeah, that's. I don't know what it is. Every time I think about spending on a car, I always concede. I'm like, I don't know. I can't seem to. I could buy this, or I could invest in stocks, or I could invest in this. Yep. So let's see. Okay. So Iron picked up about 100 shares yesterday, sitting at just under $40 support here. And I think I picked it up in the low $41, $42, and the plan is to sell a covered call. Meta Platforms picked up pre-market right now on this news. It was up over 7% at one point, getting up to almost 6% right now. Support level is going to stay put at 660, all the way down to 635. And pre-market right now, we got NVIDIA pushing up over 1%. Meta is still pushing up right now. And Tesla is also jumping over 70 basis points, with QQQs and S&P 500 just about 20 basis points higher. So essentially flat at the moment. What are my thoughts on Light and why it jumped so much at least 2-3 weeks? How does Light play into AI? So I'll have to look more into this stock for sure, because I have no idea what this company is or does. Looks like we've done some technical analysis on this. $21 billion market cap company. Annual revenue seems to be fluctuating a lot back and forth. Profitability is not consistent right now. Volume is pretty decent, but look at that weekly chart. Very overbought right now, over 80 RSI, and man, oh man, from $46 since April, it's up almost 600%. So yes, I think we had a technical analysis on this in our previous live streams, but incredibly overbought right now. So just be very, very careful. I mean, last month, November, stock was up like 61%. Absolutely insane. So support level is going to stay put right about here at 216, 217 for Light. Yeah, you can't forget to go live. Why do you make money G plus? Get 4+1 smaller convertible room. Yeah, that's really what I want. Is like also a smaller room for the office as well. Fan favorite stock analysis has been a while. Yes, I know it's been a while. So we definitely got to do one of those fan favorite videos. Maybe tomorrow. Tomorrow I'll do like the fan favorite stock update, going over NVIDIA, Tesla, Palantir, SoFi, and Hims and Hers, BMNR, BITX, all the big ones that everybody likes. So here we go. Markets are open. I also have to check the Meta calls and where they're trading. It's already starting to pull back a little bit. So thank you so much for joining, everybody. And again, I'm going to send out the alert for the Meta call later today, most likely in the next 5-10 minutes. But again, thank you so much. Link's going to be down below if you're interested in joining. Hope you all have a fantastic Thursday of trading. And we're going to wrap up this entire week in the first week of December. I think most likely flat, given that there is not a lot of volume for this market right now. So once again, link's going to be down below if you want to join. Happy investing. I'll see you all in the